Hi there, welcome to kneppyinvests. I've decided to start a new series of videos, and this is looking at 100 interesting stocks on the ASX. There's well over 2,000 companies, and I think we just don't have the time and the manpower to go through all 2,000 companies to see and find ones that are interesting. So I do have a look at a fair few companies that do release quarterly reports, and I thought I'd bring you some of these companies, but most of the companies I'll be featuring in these videos, I am a little bit interested, but not interested enough to do a dedicated video on these companies. Even though one of the companies I am featuring in today's video, I actually am a shareholder of. Now, because we are in February, I might even have themes when it comes to this video series. So today's themes is companies that did release an Appendix 4C in the December quarter. And then I might have another theme related to the fact that it is reporting season. It is February. Companies are starting to release their half-year reports. And maybe I'll find 3 companies I do find interesting based off their half-year results. And I'll do a video on those 3 companies. So let's get stuck into it. And the first company we'll be looking at in today's video is a company I have done a dedicated video on in the past. And that is Pureprofile. The way I describe Pureprofile is they are an advertising, marketing, and researching company. Pureprofile calls themselves a data and insights business, and you could actually make some money off Pureprofile without actually being a shareholder, because they actually do have an online survey community, and I actually have joined the online survey community. And if you do become a member of this community, you can actually do surveys through the Pureprofile platform, and they will pay you if you do qualify for filling in these surveys. And I think there was one survey I did get paid $4, but the majority of surveys you get paid like 25 cents, maybe 50 cents. So the hourly wages or pay you would get from being a full-time Pureprofile online survey person would not be too high. The other thing is I did not qualify for the majority of surveys. Now, Pureprofile markup is $70 million. That's at 6.4 cents. And that has been climbing over the past few years. They have $4.7 million of cash and $3 million of debt. But the most important thing, when we look at the December quarter, Pureprofile is operational cash flow positive, not only for this quarter, but they're operational cash flow positive for the first 6 months of the financial year, or the first half of the financial year. And the other thing is receipts from customers have been growing. And for this quarter, it was up to $11.2 million. There was a long period a few years ago where this company was not really performing in any sort of metric. And you can see here with the receipts history for the company going back to the September quarter 2019. From that quarter all the way to the September quarter 2020, receipts were going backward, going down, falling from 7.8 million to 6.2 million. And if we did have a look at the share price action at that point in time, the share price was mirroring the decrease in the receipts history. But this company did turn things around towards the end of 2020 and the start of 2021. There was a new CEO who came into power towards the end of 2020, if I remember correctly. And I think the market really liked that higher, because we did see the share price rise a significant amount on the day they made that announcement. And ever since that September quarter 2020, we have seen receipts starting to rise. In fact, they've climbed from 6.2 million to 11.2 million. I don't know if this rise in receipts is because of the new CEO, but we do have something I like to see in companies that I am thinking of investing in, and that is a rise in receipts over time if we ignore the first 4 quarters here. And as we have a look at the Pureprofile daily chart going back to July 2020, and that new CEO was actually hired on the 13th of July 2020, Martin Fields, and the market absolutely loved that hire, I mentioned in the previous slide. In fact, on that day, the share price rose 388% from 2.5 cents all the way to a high, in fact, of nearly 3.5 cents. And ever since then, the share price has been rising. From that time all the way to August, or late August or early September of last year, the share price was rising at a very slow, steady rate. And then all of a sudden, in September of last year, the share price just shot up very suddenly and kept on rising from about 3 cents all the way to a high of just shy of 9 cents. So a nice little three-bagger for shareholders during that point in time. But share price, or the share price has fallen back over the past few months. Now, I'm not the biggest fan of this company. I do think there are better quality companies out there, but the fact that this company is operational cash flow positive, and there is a little bit of positive sentiment in the company's share price right now, it wouldn't be the absolutely worst purchase or company to put into your portfolio, but it's something that doesn't fill me with a lot of enthusiasm. Second company today is Pure Foods Tasmania. And to be honest with you, before they released their Appendix 4C for the December quarter, I had never looked at this company at all. So this was the first time I had a look at Pure Foods Tasmania. And the only reason I had a look at this company, even though they were operational cash flow negative by over $1 million, and usually when I see that, I don't really take a close look at the company unless I like the company in other areas. And I'll show you why I initially had to look at this company in the next slide. Anyway, Pure Foods Tasmania was formed in 2015 to promote and enhance Tasmania's premium food and beverage businesses. They do have 7 brands, which include Woodbridge Smokehouse, New Pastures, and the Cashew Creamery, which is one of the reasons why I am also interested in this company. Current market cap of Pure Foods is $13 million. That's at a share price of 46.5 cents. They have $5 million of net cash and $1.4 million of debt. The main thing when we have a look at the operational cash flow for this company, it is negative right now. So that is definitely one thing that is holding me back from even thinking about taking a position in this company. The other thing that is holding me back from taking a position in Pure Foods Tasmania is I don't really like food manufacturing companies. There's a lot of things not to like about these sort of companies, including the big ones like Bega. And I think one of the reasons why I don't really like these sort of companies goes back about 4 or 5 years ago to Freedom Foods. The market cap of that company at one point was like $500, maybe $700 million, yet they were operational cash flow positive or negative. And I did not understand why. The market absolutely loved that company. And ever since then, Freedom Foods has destroyed shareholder wealth, and I have a feeling they even changed the name recently to get that bad taste of that name, Freedom Foods, out of shareholders and investors' minds. So a lot of things I don't really like about this space, and this company is not operational cash flow negative. So why is this company interesting? Well, let's have a look at the cash receipts history. So there is one thing I do like about Pure Foods Tasmania, and that is the simple fact that cash receipts over the past 7 quarters has been climbing. And that is really important for me as an investor. I want to see receipts or revenue climb through time. And for Pure Foods, receipts have climbed from 1.1 million to 2.7 million. So that's one tick for this company. The cash receipts of Pure Foods Tasmania might be climbing over the past 7 quarters, but when we look at the share price action for this company, there's nothing positive to say about this particular chart, which is the daily chart going back to December 2020, and the share price of Pure Foods has fallen from about $1.20 to 46.5 cents. And right now, there's still a little bit of negative sentiment in this company. Share price is still falling, and in fact, on the most previous trading day, which was the 4th of February, the share price finished at 46.5 cents, which was at least a 1-year low for this company. So this downtrend in this company's share price is still intact, and no reason to take a position in this company, even if you think this is the greatest company in the universe. Now, to be honest with you, even though the cash receipts history has been climbing, that really didn't float my boat, pique my interest. But when I actually did go through their presentation, actually no, it wasn't a presentation, it was just simply their Appendix 4C commentary, I just noticed they do have ice creams. And I am this shallow that I will be interested in a company that sells ice creams. And Cashew Creamery, which is one of the brands that Pure Foods Tasmania does own, have some ice creams, including coffee, vanilla, chocolate, strawberry, and mint. I would probably only be interested in the chocolate and mint flavors. And they also mention, and this is the most important thing, 4 packs of cashew creamy ice creams in 5 flavors will be ranged in Woolworths Metro stores from January 2022. So that is the only reason I find this company interesting. Even though cash receipts are going up, it was this little thing that made me interested in this company. Now onto the company that I actually do own in my portfolio. And the only reason I own Spectre is because the market cap of this company is really low, and I think they can become operational cash flow positive eventually. And if they do become consistently operational cash flow positive, increase the cash in the business, a market cap of $6 million does seem awfully low. So Spectre is all about remote security solutions. So they have surveillance security cameras, and most of those cameras I do think are solar. So that's solar powered 24/7 monitoring. So really into crime, deterrent and prevention. Also all about safety and warning systems. Now, this is a very slow burn sort of company. You want to see that when we look at the cash receipts in the next slide. But for this particular quarter, receipts of customers was disappointing in my opinion, 1.5 million, particularly because we had seen the cash receipts rise over the previous 2 quarters, and they still not operational cash flow positive on a consistent basis. They have been operational cash flow positive in a few quarters, but I want to see this on a continual basis. And I think that is the inflection point that I am waiting for. And in this particular quarter, they were operational cash flow negative by $263,000, and that was helped by government grants and tax incentives, which was $301,000. Have $1 million of cash, which is not enough in my opinion because they are still burning through some cash. They also have debt of $500,000, and they actually did increase their debt this particular quarter. So there is a real potential they actually will do another capital raising either this quarter or the next quarter if the cash balance of this company doesn't improve. And the cash balance, or the best way for the cash balance to improve, is for the company to become operational cash flow positive. The main reason I did buy into Spectre was a markup $6 million. And I just thought low risk and pretty good rewards for that sort of valuation with a company that is almost getting to the point of being operational cash flow positive on a consistent basis. But it just seems like it's taking forever for this company to get there. And we look at the cash receipts history for Spectre going back to September quarter 2017. It has been rising generally through time, and this company was hurt by COVID-19. You can see a bit of a dip during 2020. And 2 quarters ago, we did see receipts climb to $2 million. Things were looking quite exciting for the company at that point in time. But receipts have fallen from $2 million to $1.5 million during the last 2 quarters. I would like to see in the next quarter another little ramp up in the receipts. Over $2 million would be ideal, and the company being operational cash flow positive. So at this point in time, even though receipts are growing slowly, I would like to see a little bit better growth in the receipts, and also the company being consistently operational cash flow positive. And the market didn't really like this Appendix 4C. You'll be able to see that little fact when we look at the chart in the next slide. As we look at Spectre's daily chart going back to November 2020, nothing really exciting happening here during this time period. There was a little bit of excitement starting in July last year, and if you look back at the cash receipts history, that was the quarter. They had $2 million of cash receipts, and more than likely they were operational cash flow positive that quarter. And during July and into August, there was a little bit of hype, a little bit of increased interest in this company. Share price did rise from about 7 cents to a high of 12 cents. But since that high of 12 cents, which was reached in August of last year, share price has really struggled, particularly when they released the most recent quarterly results. Share price has fallen from around about 8.5 to 9 cents to a current share price of 6.1 cents. So a little bit of negative sentiment right now in the Spectre share price. And if it does fall significantly lower, I'm thinking like 4 to 5 cents maybe, that would be a time I would be thinking about topping up in this company, just because the risks moving forward would be significantly lower. And that's just me. You might think differently, but I do think there is a potential this company does reach an inflection point, and that inflection point is being consistently, and that's a very important word, consistently operational cash flow positive. And if they do reach that, I do think there will be an increased interest in this company, and that's when the share price will take off. That's all I have for this part 1 to 100 interesting stocks. Now, those 3 companies I featured in this video, Pureprofile, Pure Foods Tasmania, and Spectre, are interesting for different reasons. One of those companies are selling ice creams, and that's the only reason I'm interested in them. Another company I actually own, and that's probably the only reason I am interested in that company, plus they have a fairly low market cap as well. And Pureprofile, we see fairly positive sentiment behind the company. They are operational cash flow positive and have been operational cash flow positive for a few quarters. I just don't really like their business model. If you do have any questions about any of these companies I have featured in this video or any other company on the ASX, just leave your questions, your thoughts, your comments in the comment section of this video. Otherwise, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.